All right, so Elon Musk is back stirring the pot. He tells his 200+ million followers, cancel Netflix for the health of your kids. And to top it off, he says he canceled his own account. Within a day, Netflix stock dropped 2 straight red sessions, down more than 2% one day, nearly 3% the next. And the internet exploded. Hashtags trending, headlines flying, hot takes everywhere. But here's the question. Does this just burn out like most social media flare-ups? Or is this the start of something that actually dents Netflix subscriber base? Stick with me for the next 15 minutes and I'll walk you through how I'm mapping it. 2 possible trades, fading the panic if the hype cools, or following through if the boycott finds traction. I'll show you the signals, the invalidation points, and how to structure options so you're not the one holding the bag. So let's lay out the facts. Elon Musk jumps on X and posts, cancel Netflix for the health of your kids. He says he canceled his own account. His point? He's echoing conservative parents who argue Netflix is slipping politics into children's shows. The show at the center is Dead End Paranormal Park. It first dropped in 2022, features a transgender teen lead, and was cancelled in 2023. But the episodes are still on Netflix. It's not a new flagship. It's an older catalog title that's resurfaced because clips went viral.
It's not the park. It's me. I'm trans, Norma. And everyone at school knows, and everyone at home knows. And being here, it's like a whole new place. I can just be Barney. And I can choose if and when I tell people. I've never been happier. And that's saying something when I spent today chased by terrifying zombie mascots. Pugsley reminded me how important it is to live your life without apology.
Now, here's what markets do. They react first, ask questions later. Within hours of Musk's post, shares fell. Wednesday, down about 2.3%. Thursday, down another 2.9%. That's classic headline risk, sentiment and uncertainty weighing on price before anyone has hard data on churn. And I need to stress this. Some pretty nasty screenshots circulated online, allegedly from the show's creator. Business Insider could not verify them, and the creator himself denied celebrating anyone's death, saying he's faced harassment since. That matters because as traders, we can't treat rumors as trading signals. We trade receipts, price, volume, volatility, and company statements. And as of October 2nd, Netflix hasn't made an official comment. That silence, that's uncertainty, and uncertainty gets priced as volatility. Now, you've probably seen the phrase, go woke, go broke, making the rounds whenever a company gets dragged into cultural debates. The idea is simple. If a brand leans into progressive social messaging, it risks alienating a big chunk of its customer base and sales drop. But does that actually hold water in markets? Let's look at a few receipts. Take Bud Light. In 2023, they partnered with influencer Dylan Mulvaney for a sponsored post. The backlash was immediate. Conservative voices pushed a boycott. Sales collapsed more than 20% in some regions. And the parent company, Anheuser-Busch InBev, lost billions in market value over the following months. Reuters tracked the fallout. It was one of the clearest cases where a culture war translated into real sustained consumer behavior. Another example is Target. In 2023, they rolled out Pride-themed merchandise. Backlash led them to pull some items from shelves. The result? A sales decline in the second quarter, the first drop in years. Their stock took a hit too. Again, headline outrage turned into actual lost revenue. But here's where the narrative gets messy. Not every so-called woke company actually broke. Disney leaned heavily into inclusive messaging, sparring with Florida politicians, and yes, it sparked boycotts and angry hashtags. But Disney Plus subscriptions kept climbing globally that same year, and theme park revenue was strong. Investors complained about margins and debt more than politics. Nike is another one. Remember when they featured Colin Kaepernick in their ads back in 2018? People burned sneakers on YouTube. The stock dipped briefly, then went on to hit all-time highs. Sales actually increased in the quarters that followed. So what do we learn? Sometimes outrage hits consumption hard, like Bud Light. Sometimes it fizzles, like Nike. And sometimes the narrative gets mixed in with other headwinds. Think Disney, fighting, streaming, losses, more than boycotts. That's why I frame Netflix here as headline risk first. We won't know if this is Bud Light 2.0 or Nike 2.0 until October 21st, when subscriber numbers. Headlines are sparks, but sparks don't guarantee wildfires. For a fire to burn, you need spark, fuel, and oxygen. The spark here is Musk's post and the viral clip. The fuel would be more voices joining in, maybe politicians, celebrities, influencers amplifying the call. And the oxygen, that's time. If this trend lives for days and weeks, that's when behavior changes. That's when people actually hit cancel subscription instead of just retweeting. Markets move in layers. The first layer is sentiment. That's what we've already seen. Gaps lower, IV popping, spreads widening. That's traders reacting to the possibility of trouble. The second layer is fundamentals. That's when churn actually hits the subscriber numbers, when guidance gets revised down, and when analysts change their models. We've got precedent. In 2020, Netflix faced the cuties controversy. Cancellations spiked to nearly 8 times the normal average, according to Antenna and Variety. But here's the thing, it was short-lived. The outrage cycle cooled and subs came back when the next tentpole show dropped. On the flip side, think Bud Light in 2023. That boycott actually stuck for months. Sales dropped, market share eroded, and Reuters tracked the persistence. Why? Beer has low switching costs. You see a competitor on the same shelf, you grab it. Streaming, it's stickier. People have profiles, watch lists, unfinished seasons. Canceling isn't as frictionless. So the base case here, sentiment shock first. Maybe it fades like cuties, but if it grows legs, October is when we'll hear management address churn or brush it off. So let's talk setups. There are only 2 clean paths for me. Fade the headline or ride the follow through. If I'm fading the headline, I want to see Netflix print red in the morning, then claw back green by afternoon, a red to green reclaim. I want that on above average volume. That's my sign that sellers are getting exhausted. I'd also want to see the hashtag slip off trending and implied volatility cool a little. If those conditions line up, I'll buy strength after the reclaim. My stop is clear. If the stock closes back below the reclaim or undercuts the prior day's low, I'm out. The target is a gap fill or a tag of the 20 or 50-day moving average. For options, a bull put spread 1 to 2 weeks out, 5 to 10% out of the money makes sense. Or a call debit spread if I want convexity without paying max or 4 retail. If instead this turns into follow through, here's what I'm looking for. The hashtag keeps trending. More big names jump on the cancel train. Maybe we see third-party data showing App Store ranks slipping or cancellation traffic spiking, and the chart confirms with repeated VWAP rejections and lower highs. That's my green light to short failed bounces. I don't chase gaps down. My invalidation is a close above that failed bounce pivot or a clean VWAP reclaim. Targets, I'm aiming for a measured 3 to 5% extension or the next demand zone. For options, I'd lean into put debit spreads 2 to 3 weeks out, or even a put calendar spanning earnings, shorting the front week, long the back week that covers October 21st. That way, your long event volatility without lighting cash on fire in the front. Let's zoom out. Churn isn't just a chart term, it's real households canceling a $12 to $15 subscription. For one family, that's takeaway pizza money. But scale that up. 1 million cancellations, that's over $10 million a month in lost revenue. Multiply it by a year, you're talking over 100 million. That moves guidance. Now, here's the nuance. Netflix is sticky because of exclusive content. Your kids mid-season on Stranger Things, hard to quit. But if parents see cultural reasons to cancel and household budgets are already squeezed by energy bills and groceries, that's when the cultural push meets real money. That's why October 21st is so important. The CFO might literally say one word, churn, and that changes the narrative. Analysts will update models, institutions will adjust their multiples, and traders like us will see the stock gap accordingly. Now let's talk about how traders mess this up. First, don't trade screenshots. Google Trends spikes, hashtags trending, or viral claims are noisy. They're like gossip. They hint, they don't prove. Unless it's confirmed by price or management, treat it as context, not signal. Second, the implied volatility trap. Buying naked puts or calls when implied volatility is pumped is like paying scalper prices for a concert ticket. Even if you get in, if prices normalize, you lose money. That's why I like spreads. Bull put spreads or debit spreads reduce exposure to IV crush. Third, earnings gap roulette. Netflix has already told us results are coming. October 21st at 1:01 Pacific, with a live interview at 1:45. If you hold positions through that, except that you're coin flipping an earnings gap. Keep risk defined, keep size small. So here's where I land. Headlines can move stocks, habits move businesses. Right now we've got headlines. No proof yet that habits have changed. If the trend fizzles, the fade trade wins. If it grows, the follow-through trade wins. Either way, I'm not gambling blind. I'm waiting for price action to confirm and keeping my risk capped. October 21st is your line in the sand. That's when we'll know if this was a Twitter storm or the start of a narrative that actually dents Netflix's subs. And if you did rage cancel Netflix, at least tell me what show finally broke you. Was it Love is Blind or was it Emily in Paris? No judgment here. Peace.